Welcome back to Growing Your Savings Using Blue Chip Stocks. Today is December 5th. Prices were updated on Friday. November performed okay, but not as well as October. So we're going to check in with our listing of Canadian stocks on the TSX and our US stocks on the New York Stock Exchange and the NASDAQ, as well as my 4 fantasy TSX portfolios to see how they're doing. Our $5,000 portfolio is down this week, minus 2% on the year, which is a drop from the break-even point of 0% last week. Our $10,000 portfolio is up 6%, which is a slight drop from 7% last week. Our $25,000 portfolio is doing very well with a 5% gain, which is up from 3% last week. And our $100,000 portfolio, which closely reflects the TSX as a whole, due to the variety of stocks in the portfolio, is finally on the positive side, up 2% since the beginning of the year, a rise from minus 1% last week. The $10,000 and $25,000 portfolios are definitely beating your basic 1 to 2% that a GIC pays. Things seem to be turning the corner as we near the end of the year, and soon we'll reinvest those dividends that have been increasing over the year. Remember that you're in this to grow your savings and your stocks are paying dividends. Blue chip stocks are a slow and steady growth. You aren't going to get rich overnight, but the earlier you start investing, the more you will gain in the long run. And don't forget that each portfolio that we look at will also show the dividend payout so you can see how the stock market pays you. So things to remember as always, the prices on the stock market will go up and down with the economy and world events. With blue chip stocks, the dividends are fairly secure. They will pay out at the same rate no matter the value of the stock. Dividends can be used to buy more stock. And dividing your money evenly into each of the 5 sectors shown will create a stable portfolio. When one commodity goes down, the others tend to go up. And when the market takes a tumble, and it will always take a tumble at some point, this is when you will buy. Either add cash or reinvest your dividends. Just a reminder too, this is for information purposes only, and I take no responsibility for any gains or losses you experience in the market. So taking a look at our Canadian portfolio, in manufacturing and industry, we are now up an average of 6%. Consumer goods is starting to come back, and we are, as a whole, it's only down 1%. That's pretty good. We've got some really strong gains with, say, restaurant brands, Saputo, and Loblaws, which are offsetting some of the losses at, say, Leon's and Andrew Peller. In finance, still mostly in the red, although we do have one little glimmer of green in Home Capital Group. That stock actually doubled in the last week or so due to the fact that they are going to be bought out in I believe, March or May. So finance has an average loss of 13% on the year right now. Resources and commodities, still very, very strong. We are totally in the green, and we are showing a 33% gain. So if you invested in resources and commodities, you've got some good strong gains there. Utilities, not too bad. We are down 4% overall. We've got a couple of gains offsetting some of the losses. So our average in the Canadian market is a 3% gain on the year. We have some dividend increases. So in utilities, Enbridge has raised their dividend. Finance, we've got 3 of the major banks, Royal Bank, CIBC, and Bank of Montreal, have all raised their dividends in the past week. So taking a look at the U.S. side, we've got manufacturing and industry. It has been struggling a lot this year. We are showing an average of an 11% loss. Consumer goods and services has climbed way back up. We are only showing a 1% loss here. We've got some really strong gains with McKesson, Lamb Weston, and also Molson Coors in the consumer goods and services sector. Finance sector still in the red, although it's climbed back up to about minus 20. I think at one point it was down to minus 35. We have a 1% gain with Visa. Resources and commodities was showing still minus 8%. Chevron, of course, is up 13%. That was a good buy. And utilities down an average of 17% this year. So the U.S. market is still showing a 10% loss on the year. So taking a look at our fantasy portfolios, our $5,000 portfolio, which we only have one stock in each commodity, so it's at the mercy of some major drops. So for example, Suncor, if you take a look, Suncor was at $43 at the end of last week, down from 47 the week before. The other big drop we had was Canadian Tire, not Canadian Tire, sorry, TC Energy went from $64 down to 58. So we're showing a minus 2% loss in the $5,000 portfolio. So we are at $4,935, which is down $121 from last week and $148 overall. Dividends in the $5,000 portfolio are unchanged at $210.16. And in the next few weeks, I am going to reinvest that money back into the portfolio. Our $10,000 portfolio doing very well. It is up 6% on the year, so we're sitting at $10,672. It took a bit of a loss of $62 from last week, but overall we are up $837 on the year. Dividend income for our $10,000 portfolio is still $391.74, soon to be reinvested. Our $25,000 portfolio is showing a strong gain of 5%. So we are up to $25,455. It's a gain of $434 from last week and $596 overall. Dividend income for this portfolio is now $776. I didn't update that in December. $776 is our dividend for the $25,000 portfolio. So that will also be reinvested. The $100,000 portfolio, which is the one that most closely matches the market, has now finally turned the corner and we are in the green. We are up 2%. We are sitting at $97,604, which is an awesome $2,606 gain from last week. And we have climbed way out and we are only down $953 since the beginning of the year. Compare that to the beginning of October when we were down $9,200. So that has definitely come way up. That's following the market. So dividend income for our $100,000 portfolio has now climbed to $2,674.66. And as I mentioned, for the $5,000 portfolio, I am going to be spreading that cash back into the market. I will decide which stocks I'm going to buy, and I will increase the shares. In the next couple of weeks, I'll point that out. So let's watch the market this week and see how they do, and we'll see if we can get our averages up even higher than what they are. Join me next week on Monday to see what's happening.